Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to Trillions. I'm Joel Weber.
And I'm Eric Balchunas.
Eric, you know what we're going to talk about today is the future. How is it to invest in the future with ETFs?
Yeah, I mean, look, I immediately think of ARK. I think Cathie Wood and ARK really kind of put this trade on the map of like trying to capture trends that are 5 years from now. But I mean, to her credit, even though the ETF has gone up and down a lot, robo-taxis are actually happening. You see clips of this. Surgeries that are remote are happening. I've seen clips of this. So some of the stuff that was discussed 5 years ago by her is sort of coming true. And I think for investors, they like to have their S&P 500 and they love that, and you'll never get them to give it up. But they also don't want to miss out on some of the stuff that might be happening early and then speculative and tech-oriented. And especially in the U.S., we are innovating all the time, and people want to capture that as best they can. And there's a void to fill for investors, and that, I think, is where thematic ETFs really deliver a lot of those sort of up-and-coming themes, sometimes even before you've even heard of the theme or the theme is even ripe.
So we're going to talk about a certain story today. The headline was Wall Street pitches sci-fi ETFs for robots, UFOs, and quantum bets. That's by Vildana Hajric, a cross-asset reporter with Bloomberg News, who will be joining us on this episode. This time on Trillions, capturing the future with ETFs. Vildana, welcome back to Trillions.
Thanks so much for having me.
So as we told you, when you put robots, UFOs, and quantum, meaning quantum computer, into a headline, that's like the trifecta, and you immediately, like, we have an automated email that goes out and invites you on Trillions. So really excited to talk to you about this today. As Eric mentioned, ARK is sort of the poster child for this style of investing, which is like, we're going to put together a bunch of stuff in a portfolio that is all supposed to be 5 to 10 years in the future. But now it's sort of like, that's not even good enough anymore. We have to get super narrow. How is this manifesting in the market?
Right. Or maybe a way to think about it is that ETF issuers are starting to think about like the post-ARK world, like the post-AI world. And they're thinking about these themes like UFOs. Like there actually is a filing for a UFO-related.
Just to stick with the AI thing, because AI was sort of like a super concentrated bet, and there's like 40 products or something on the market.
I think there's slightly more than 40, and not all of them are attracting cash. Not all of them are doing, outperforming their benchmarks or outperforming the S&P even. So it's sort of like a struggle there to attract attention and assets, but
so it's like move on already.
Moving
like that's
on
so
to
saturated.
outer space. Yeah,
literally.
Literally.
So or not even outer space. Like humanoids is one of the ones that you talk about. What's that look like?
Humanoids is so fun, I think. So when we're talking about humanoids, we're talking about robots that Elon Musk is hoping to put in your home to help you with your chores.
The Tesla Optimus robot.
I think he even said at one point that the robots will be expected to babysit, which...
Well, you have a kid, like not even 2 years
I'm
old.
not leaving.
Would you leave a kid with that?
No, not a chance.
Eric, would you let a humanoid do some babysitting?
Not yet. I mean, it would take time for me to come around to that.
Would you let it watch your parents?
It depends what shape my parents were in, but I will say, I saw this movie After Yang with Colin Farrell, which really is, I think, a glimpse into living with a humanoid. It's basically like 30 years from now, and the younger sister of the robot actually develops an emotional bond, and it's a whole thing. It's a great movie. To me, it feels like the closest that we're gonna get to what will exist in that front, but it will take 20, 30 years. I think my kids will be the first to really adopt and, trust a robot walking around the house and stuff. I mean,
just getting out there. Yeah, Vildana.
Real quick, though, on the humanoid, one part of this, though, you said like AI and robotics, like it's still a hot theme. I mean, there's like, I don't know, I think it might be the first or second biggest theme out there at this point, but there are like well over a dozen now. And so now it's like, okay, if you put robotics and AI out now, you're probably dead. I mean, unless you get lucky with performance, So humanoid to me is sort of like, okay, let's take the AI robotics and actually like make it more narrow and see if there's a market for that. But I will say robotics and AI is such an impressive theme to me because it's gotten a third bite at the apple, let alone a second. Like, it's hard to take in a bunch of money. Robotics was huge like 10 years ago. Then it fell from grace. Normally, that's it. The theme kind of like lives in semi-oblivion after that. But then it came back and people bought it again. Then it went down, and then it came back again and people bought it, with NVIDIA in particular ushering in the AI concept. And so I think this is one of the most durable, long-lasting themes is AI robotics. I put humanoids in there as well. And there's money there. I mean, there's a lot of potential still, but it's getting more and more saturated.
Okay, so the humanoid products, because there's now 2 ETFs. What are they, and how are they investing?
There's one from Crane Shares and one from Roundhill, and they're investing. They have slightly different investment theses, but the Crane Shares one, for example, has like 3 different things that it's looking for, like the brain, for example, of the actual humanoids, like who's building those components, and the companies behind the robotics revolution, I guess we can try to call it. I think there's a slight tension here in that, Eric said maybe in 30 years he'll have a robot in his home to help with chores or whatever. Issuers want you to get in on this now, expecting it to continue to grow and grow. So Morgan Stanley, for one, is expecting it to be a $5 trillion industry by 2030, which is pretty soon. Elon Musk says robots will be in your home sometime soon, maybe. They'll be in Tesla factories, supposedly, in the next 6 months or so. These things definitely exist. The robots are helping run different factories in Asia and other places. And so it's here. It's just a matter of how much will it grow and whether or not you want to be in on the ground level, which is basically now.
So the Crane Shares one you mentioned, the ticker is KOID, K-O-I-D. That came out in early June. There's some companies that I've kind of never heard of. Jabil Inc., Linus Rare Earths Limited, Amphenol Corp., Melexis, and then you got the NVIDIAs and the Teslas in the world. Like, so many of these things are like, they're really trying to identify what a supply chain for this stuff looks like. How do you get exposure to it? So what the new one is Human, H-U-M-N.
From Roundhill.
From Roundhill. So what's the approach that Roundhill's taking?
Roundhill's is, well, they're both actively managed. So the Roundhill one is focused solely on companies designing and building humanoids. It's actively managed. It just launched, so we'll see how those end up performing. I think actually there's very little overlap between some of these companies and some already existing robotics and other AI ETFs, which I think is impressive. Like, I spoke with Dave Nadig, who we know is an ETF industry veteran, and even he said, it's pretty impressive that there's very little overlap between some of these, because you would have thought maybe on the outset that the investable universe would have been small. But there's quite a number of companies that you can add into these ETFs that are internationally based, for example, that are working on some of these things, whether it's rare earths or chips or something in the supply chain.
It's worth mentioning that some China humanoids are already in effect, and like the YouTube videos are insane for those. Eric, how many humanoid ETFs can the market sustain?
Well, we got to see how popular these are. Probably, if I had to ballpark it, 3. Okay. But that's assuming these are somewhat
the way
successful. Yeah, I mean, one thing about the 2 ETFs that have launched, KOID and Human, is that you got to look at the holdings. You opened up KOID, Joel, and you said, I don't recognize any of these names.
Just the ones that I rattled off, yeah.
I love that reaction when I open a theme ETF. To me, that's what I want to see. I don't want to recognize the names. And KOID looks like it's mostly equal weighted. So you take all the names. That's why like NVIDIA is like just in there with all these other names you never heard of. It's like a face in the crowd. The reason that's good, in my opinion, for these themes is that you want bigger bets on the smaller pure plays, because they tend to get bought by the NVIDIAs of the world, and you get a ton of money on that acquisition, a ton of return. So KOID to me would be probably more volatile, but you get more M&A pop potentially. And then Human if you look at the holdings, it's Tesla, Nvidia, top two make up 20% of the portfolio right there. Well, a lot of people already own those two companies in other funds, so you're going to have a lot of overlap. So that's something to consider when you're investing in these. But if you have Tesla and Nvidia at the top, it will mean probably less volatility. So it'll be a slightly calmer ride probably. But that's just, these are the things you have to weigh when you're buying a thematic ETF. But I do like that there's two choices. One's a little more market cap weighted and, popular seeming, and the other one's a little more far out there with equal weighting. And then people can decide what's best for them.
Okay, we've talked about the humanoid space. What other spaces do we want to talk about, Vildana?
Quantum is definitely a hot one.
Yeah.
There's a pretty big quantum ETF, QTUM. So far this year, it's already gathered more than 600 million in inflows. So it's definitely something that I think people are just awakening to much, much more. Because the ETF's been around for a couple of years already. Mm-hmm. But so far this year, it's already on pace for a record year of inflows.
Eric, how does that stack up for sort of a cutting edge ETF that's, a pure thematic play?
It's great. I mean, Quantum, the ETF, is a total hit. It's the Defiance's number one best-selling ETF. And, what's interesting about Quantum, the ETF also, is it is also equal weight. It might not be totally. Sometimes they do this thing called modified equal weight. But either way, it's more like COID in that you're getting a lot of more exposure to some of the more smaller pure plays. And it's got, looks like 1.5 billion. There's a couple other ones on the market, and they don't really have much. So the one ETF from Defiance is just basically like raked in the lion's share of assets here. But another interesting thing on the quantum world, Joel, is that if you remember the episode we did a little while back on all of these hot sauce 2X stock ETFs.
Oh, yeah.
There's this huge trend in putting 2X on top of small quantum computing stocks, and they're hits. So there's the quantum theme, but there's also a huge interest in really gambling on these juggernaut small quantum stocks. One of them went up 100% in one day. So the stock went up 50%, the ETF went up 100. And that's the most pop an ETF has ever had in a day. So they're volatile, but that's that's a feature, not a bug for the degen crowd that trades these. I think the quantum theme would be for a more like normalized long-term play because you're diversifying. You're actually taking volatility off the table. So again, with ETFs, there's something for everybody.
As long as we're talking about super future stuff, because quantum is super speculative. Like it's out there, maybe sometime. What the real world applications look like, big time TBD. Can we talk about UFOs? Because once you tease that, it's like you got to come back to it.
I know. I love this
So
one.
what's going on with UFOs?
Matt Tuttle of Tuttle Capital Management filed for a UFO-based ETF. So
ticker UFOD.
Yes, and it's pure conjecture at this point, just to be very clear. But the idea is that there is potentially some sort of alien tech that may be revealed in filings, if the government releases records, that type of thing, where you might discover that there's something tied to aliens there with R&D companies, for example, or defense contractors or those types of companies. And so this ETF would purportedly invest in those types of firms.
I think Eric exhaled right when we pitched this. Go ahead and take the mic. Go ahead and talk about it.
Did I get it right, Eric?
Well, there's actually even more of a level here. It's that the new administration is going to open up
the Trump administration.
Area 51.
Okay.
Right? They're going to be real liberal about letting all of this into the public domain, sort of like the JFK files, whatever. So they're going to open up Area 51 and all the research there. And they think they're going to talk about the UFOs they have there. And they're going to let the tech or the architecture of these spaceships and that the big tech companies are going to steal the alien tech and make money off of applying the alien tech, and this ETF's going to track all that.
Have you read this filing? Have you read this filing?
I did. No, I read it. I talked to Tuttle too. Now, mate, before you laugh and change the channel or whatever, Tuttle just hit a home run with the Europe Defense ETF. Remember, this was on our episode last time, which is it has $1 billion. He was the only one who foresaw this. He launched it in October before the election. So he kind of foresaw the election and then the pullout from NATO, or at least some threat of it, and the increased spending from Europe. And boom, this theme has taken off, and he's the only one in this market. Now, I'm not saying this will have the same thing, but Tuttle definitely is probably the most experimental issuer out there, but sometimes it works. And again, if it does work, it works big, because he's had the market to himself for months now too. In Europe, they've got like a dozen of European defense. Here's just one still, and he has all the market.
Okay, what happens if this doesn't work out?
Nothing. He just won't
probably
launch
just
it.
close it and try.
We're never going to talk about it again. Okay.
It hasn't launched yet.
Oh. So, Eric, what has to happen for this to launch?
Well, the SEC may give him a little pushback on the name and whether it's appropriate. Remember, every now and then the SEC has issues with names. They didn't want blockchain in the name when the blockchain technology was early, so people had to make up different names. They didn't want cannabis and marijuana in names, so they had to work around that. And also, by the way, Tuttle just filed for a government grift ETF, which is one that's trying to make money off of like insider trading in Congress. And so that is another one. Will they let that name through, considering the SEC is part of the government? Anyway, Tuttle is always pushing the bounds. I'm sure when his filings come through, it's like a whole thing inside the SEC. I'm sure.
It's
but
like, oh, here's this guy again.
Legally, I think as long as the ETF does what it says it's going to do, they have to let it out.
And does it say anything about the kind of holdings it would aspire to have?
I think it's defense contractors. R&D was mentioned definitely in the filing. I just love the idea of us finding out about alien tech.
We might talk about this one again. We'll see.
I really hope so.
I said might.
I hope so.
Okay, so it's a perfect segue into thematic doesn't always work out, right? Like, let's talk about the metaverse, that whole thing that Mark Zuckerberg at Facebook, then Meta, tried to basically own. And there were meta ETFs, and those we don't talk about anymore, right? So what's the risk of really speculative, niche, thematic ETFs?
I think we're the first people to utter the words metaverse in like 3 years, which just goes to show how much that fizzled out. Like, I remember a couple of years ago when Facebook changed its name and everybody was all about the metaverse, but it was highly speculative and you really needed people's buy-in, and it just didn't happen. And metaverse tied ETFs ended up closing, so that fizzled pretty quickly. Nobody talks about it. Nobody mentions it.
Amazing how quickly Meta just pivoted to AI there too. Sorry, Eric, go ahead.
I will say that the metaverse ETF is outperforming the S&P since launching, so it has been a pretty good investment. But it's kind of accidental. I mean, Apple's the second biggest holding. It has Ethereum and Solana in it, so it's got a crypto kick. Meta has had a good run. I mean, it's a lot of Mag 7 plus crypto, which has done pretty well.
AI,
so
AI, right? Yeah.
Sometimes a theme goes up, even if the theme sucks, which tells you, again, let's go back to the human ETF. If you hold mostly Mag 7 stocks, it doesn't really matter what the hell you call it. It's going to move like the Mag 7. And so this to me is like kind of lucky. But by the way, remember we had, I think, did we have Roundhill on, or we just were speculating that they used to have the ticker Meta, and they sold it to Mark Zuckerberg, and for an amount that was undisclosed. So it doesn't even matter if this ETF's a hit. They totally got paid already. But I agree with you. The metaverse just went away, man. It's crazy. Almost like ESG. Not as bad, but close.
Yeah. What other thematic plays are on either of your radars?
There's Megatrends, which Lazard is taking advantage of. They launched a couple of ETFs in April. THMZ is one of them. It's a Megatrends ETF. So again, think about like the way that they described it to me is it's not stuff that's on page 1 of the newspaper. It's stuff that's like on page 32, section C, for example, that's slowly making its way to the front. So again, you're getting in on the ground level. You're getting in early, that type of thing.
The stuff you haven't heard of. Yet.
Yeah, exactly. Yet.
Is that just trying to capture everything across sort of this kind of thematic universe?
No, they also break it down into a couple different themes that they like software, apps, and agents, data and AI, that type of thing. Future health is one of them.
Okay.
But THMZ is up 20% since its launch. So over the past 2 months, up 20%, not bad.
Okay. Eric, any on your radar?
One that we're looking at because it was part of the May launches was the third, Joel, monopoly ETF, which basically invests in companies that like have somewhat of a monopoly on their industry, sort of like the wide moat ETF. It's not that novel, but I just, there is the first monopoly ETF has 50 million. The second one has nothing. And so here comes a third one. And so this is where this becomes tough. And the third one has a higher cost. I mean, unless you have an extreme breakout, it can be tough. So I think with thematic ETFs, you do have to be in it to win it. So you want to try, and I hate to tell people not to try, but I think at some point, these ETFs are, it's like we have a phrase on the team sometimes when we see a filing, good luck with that. Like when we see some legacy mutual fund company come over with like an 80 basis point large cap blend ETF, like good luck with that. Like where have you been? It's like not 1985 anymore, okay? So we wanted to actually have a monthly note called "Good luck with that," but we were saying it's a little too dark.
I think there's an upcoming episode that we can call "Good luck with that." And
Good luck with that. Yeah,
we'll autopsy those.
It should be a recurring episode. But so that's one where it just caught my attention, which is how big the rush is. But here's the thing: if you look at all of the launches coming out, the part of the problem is like the regular stuff, vanilla, has been had. The vanilla space is over. Like Vanguard, BlackRock dominate it. Even if you had success there, you'd have to be charging zero fees anyway. So part of what's happening is if you're in the asset management space and you're trying to get some organic flows, you kind of have to try in a couple different areas, buffers, hot sauce, and thematics. And thematics probably are one of the more sober versions of hot sauce because it is diversified. And if you can catch early a theme, you're good because you can charge well over 50 basis points in this category, and you get a couple billion on like 80 basis points, and you're in business. So there's enough hits that it's almost a lottery ticket system for the issuers as well as the investors. But again, I think it's just tougher and tougher the later you are, which is why we see so many themes coming out before they're ripe. I would argue the humanoid theme might not be totally ripe enough. I mean, it's really far out there. But they're going to try, and as the more pure plays come in, the ETF will become more purish. But they may put beta filler in there at first just to try to get out early and
to have that first mover advantage and kind of like
totally
plant the flag. Okay, one more thematic, Eric. What do you got?
Yeah, so remember, it must have been 4 years ago, right around COVID, early COVID.
Yeah, it's like pandemic days.
I came back from the Inside ETFs conference, which is now called Exchange, and I was in a new analyst pitch competition or new ETF pitch competition between analysts, and I pitched uranium. It had like $10 million in assets. This is how early I was, Joel. And one new one launched, and I said, "There's something going on here. I think uranium could be good for green energy." They now have close to 10 billion in assets. So within 4 years, this theme that was like in oblivion for years and years, just the world turned, and uranium as part of nuclear has become more and more accepted. It's used to power AI now. So sometimes you just have to just hang around with your line in the water and wait for the world to catch up to your theme, and boom, when it happens and everybody's like, oh, this is obvious,
you're like, tarpon on. We got a big one.
I will say URA was around for about 8 years before this. Then URNM listed. That's what caught my attention. And that one now has 1.7 billion. But URA was around for like 10 years and nobody cared. It sucked. It was down. And I give it credit. It could have closed. Sometimes we see ETFs close right before their number comes up.
Yeah, we talked about that.
But it hung in there, and now it's 3.8 billion.
Just got a rope a dope.
And so sometimes you could be 10 years early, Joel. 10.
Just rope-a-dope.
Eric just wanted us to know that he had this.
I know. Did you catch the humble brag in
a
there?
little humble
It was
brag,
really
yeah.
good.
Because you know what? You know what's a sin? I came in like third or fourth place.
He's
and yet
still
my
mad.
ETF crushed everyone in terms of flows and popularity and just being ahead of the curve on a
There it was.
Harboring a
And
grudge.
none of them are
Yeah.
here to defend any of their
None of
picks
them.
either. But, you know,
Their picks were probably like $100
It's like when
billion
you look
ETFs.
back and at the Academy Awards and you look and you're like, I can't believe so-and-so didn't win
yeah.
the Oscar for that role.
Do you like how he's giving himself an Oscar now?
Yeah. Oh my God! Wow.
All right.
Yeah.
On that note, we're going to leave
No,
it
he
there.
missed out on the Oscar, but he's still bitter.
Yeah. But really, everybody knows I deserved it.
Yes.
Vildana, keep up the great work, and we look forward to more of your headlines.
Thanks for having me.
Thanks for listening to Trillions. Until next time, you can find us on the Bloomberg Terminal, Bloomberg.com, Apple Podcasts, Spotify, or wherever else you like to listen. We'd love to hear from you. Hit us up on social. I'm at Joel Weber Show. He's at Eric Balchunas. Trillions is produced by Magnus Henriksen. Brendan Newman is our executive producer. Sage Bauman is the head of Bloomberg Podcasts.